Hi friends, welcome back to Cryptonomics. On today's episode, we will cover the earnings from Oracle, Adobe, and Costco from last week, and then we will preview the earnings for FedEx, Micron, and Nike that are reporting this week. We will also cover the stock and crypto markets and how they're reacting to the Fed pivot from last week. If you want to learn more about the Fed pivot and how it will impact your portfolio, check out our last episode. First, we'll take a look at Oracle that delivered earnings last week. The stock fell from 115 down to 100, but since then has recovered to 105. The company missed estimates. Looking at the income statement that's visualized here, Oracle had a total revenue of $12.9 billion. $1.4 billion were services, $756 million were hardware, cloud licenses were 1.2 and cloud services were 9.6, totaling to 12.9 billion in revenue. Operating income of 3.6 billion, income before taxes of 2.7 and net income of 2.5. The operating expenses were 9.3 billion, non-operating expenses 14 million, interest expense 888 million, and provision for income taxes was 1,217 million. That Oracle now has a supply problem. Ellison said the company is in the process of expanding the 66 existing data centers while building 100 more. They have way more demand than they can service with their supply. NVIDIA advanced AI data center chips are one of the constraints. Oracle can't supply or get enough of these in their hands. Oracle Cloud Infrastructure revenue soared 52% in second quarter Oracle fiscal 2024. Now, as Oracle Cloud Infrastructure becomes a larger part of their business, it will likely boost the company's profitability. The company has generated 3.6 in trailing 12-month earnings, 3.62 in trailing 12-month earnings per share. Based on this current stock price of 105, its trading P ratio is 29. Okay, so honestly, since NVIDIA can't even supply enough of these chips, I think there's plenty of room here for specialized chip manufacturers as well as AMD to take some market share from NVIDIA of this, what seems to be a growing pie. Next up is Adobe. Adobe was about 625 when it reported earnings and fell down to 584 post. Since then has recovered to about 600. Adobe reported $4.27 per share, total revenue of $505 billion. The top line growth was driven by strong performance in Adobe Creative Cloud, Document Cloud, and Experience Cloud. Accelerating subscriptions revenue also contributed as well. Adobe gained 85% on year-to-year basis, outperforming industry's growth of 56.2%. Subscription revenue were $4.76 billion, accounting for 94% of the total revenue, up 12.5% year-over-year basis. Services and other revenue were $171 million, 3.4% of the revenue, a decrease of 3.9% from prior year. Digital media segment generated revenues of $3.72 billion, which improved 13% year over year. Creative Cloud generated $3 billion in revenue, up 12% year over year. Creative annual run rate was $12.37 billion. This was driven by strong momentum across Firefly and Express offerings. Document Cloud revenue were $721 million, up 16% from prior year's quarter. Digital Experience segment generated revenue of $1.27 billion, up 10% on a year-over-year basis. Now, in exciting news, Adobe Figma calls off the $20 billion deal over regulatory concerns. This was partially responsible for why the stock jumped. What do $1.50 hot dogs have in common with a $2,000 brick of gold? You can get them both at Costco. Okay, next up, Costco. Costco reported earnings last week and jumped up from 633 to 658 and now is trading close to 681. Close today at 681. Market cap of 302 billion. Costco joins the $300 billion club. So Costco reported their first quarter fiscal 2024 results, beating top and bottom line. Costco reported earnings of $3.58 per share compared to $3.07 reported a year ago. Total revenues comprised of net sales and memberships of $57.7 billion. Sales showed a growth of 6.1%, and membership fees were at $1.082 billion, up $82 million from a year ago. Also, interestingly, Costco sold $100 million of gold bars last quarter, which it was selling for little over $2,000. Retail consumers bought a bunch of gold, and gold is slightly over $2,000. So hopefully they're not underwater and all these gold bugs are happy. The three companies we're looking out for this week that are reporting earnings are FedEx, Micron, and Nike. The reason we like these three is because FedEx is a great indicator of how much goods are being shipped around. This is a signal of economic activity. If it's down, that tells us the economy is slowing down. If it's up, that means the economy is strong. Micron, that reports Wednesday, it produces memory, and they're one of the biggest memory producers, the biggest US memory producer, and this will give us a great indicator of how much AI is actually developing. Even though AI mostly uses GPUs made by NVIDIA and AMD, AI also requires a lot of memory, and the memory that they need is to store all the data that both is generated and that the models are being trained on. So this will give us a bit of heads up of what's happening in that sector. Last is Nike. Nike tells us how well the U.S. consumer is doing, how retail consumers are doing, if the spending is slowing down or picking up. So these three are a great indicator of individual sectors, but also the overall economy. So that's why we're excited for those. For FedEx, Micron, and Nike, all three benefit from a strong consumer and lowered interest rates. All three have had a bump this week thanks to the expected Fed pivot, and so have many other stocks in the market. As far as the year performance, this year performance has been great for tech. We can see that Microsoft, Google, Apple, NVIDIA, Amazon, Meta, Tesla, the Nifty 7 have crushed it and are seeing amazing green returns. If the rally of this year stays until the end of the year, this will be a great year for everyone who's been in tech. Crypto has pulled back slightly from 45,000 for Bitcoin and from 2,300 for Ethereum. After digesting the Fed pivot, there was a slight pullback, and there is a lot of leverage currently in crypto markets that cause liquidations and pullbacks to be more severe. Most of the market participants are extremely bullish that they are taking on leverage and extra risk to trying to capture the upside. So don't be surprised if there are 5 to 10% pullbacks every now and then caused by extreme liquidations. Thank you for tuning in today. Hope you enjoyed the show. Don't forget to subscribe, like, and share. Until next time, peace.